Hey everybody.
Sean and Kelly here, Price and Price Group of Samson Properties, and what are we talking about?
Well, today we're talking about touring agreements, buyer broker agreements. Essentially, this came from something that you said we had someone ask. Tell everybody.
We have an attorney that watches our videos regularly, and he presented us a question. He had read an article about this and said that we should go into the details about how the NAR settlement changed touring for buyers. So we are going to take a deep dive. Here we go.
Whoop, whoop.
Okay, so everybody has heard about the NAR settlement.
Yes.
Do I need to be quiet?
No, I was going to say we remind us of what that actually, like what NAR said for the settlement, just to introduce the whole topic.
Yeah, so basically there was a settlement with buyer broker agreement, our buyer compensation being offered by sellers. It was this huge thing, and the response to that is diseveral rules have been put into place to protect buyers and sellers. It's actually a good process. One of the things is that there needs to be clear clarity. Yeah, of what the brokerage relationship is for a buyer and for a seller in any event or any encounter between agents and the public. So that's what we're going to dive into today, because though there's basically different business models that don't allow for that full disclosure. So we're going to dive into that.
That's true. And let me make a blanket statement here, because I think two big things came out of that settlement. This is one of them. And then the other one was that all commissions are negotiable, right? And let me just make a very, very clear point that in Northern Virginia, so there's a National Association of Realtors, that's NAR. When you hear the NAR settlement, that's what that is. Then all the states have their own association of realtors, and then in Virginia we have VAR, Virginia, and we also have NVAR, Northern Virginia, and there's PWAR.
Prince William. Yeah.
Is that
PWAR? PWAR?
It's PWAR.
GCAR
for Maryland and DC.
So it's all
we're all over the place. So we have all of these things. So we have to overlap rules, right? So NAR was like the general thing, and you had states that were like Loco and La Cabeza, and they never had these. This really didn't affect the way we do business in Northern Virginia. We always had to have buyer broker agreements according to NVAR. We always had to state that the fees and everything were negotiable according to NVAR. It's just that now that the public has become aware of it even the people here locally, they're hearing the up in arms of the states who didn't have that, and they're like, wait, I guess we never had it either. No, it's okay. You did.
Yeah. Nothing in essence has changed operationally, outcome-wise. Now,
they've had to change some language on...
and order of operations has maybe been fine-tuned a little bit, but as far as like the day-to-day business of real estate, here in Northern Virginia, nothing has changed. It's just become more transparent.
It's more transparent, which does go to the point that even here, agents who weren't really complying and kind of slipped under the radar by non-compliance, they can't do that anymore. Thank you. That was a very good deep dive into into even what we're talking about.
Into the introduction. Awesome. Okay, so before we dive into what kind of provoked this conversation, like I said, there are certain business models that this really applies to. So for example, if you're one of our clients and you call us and you want to go tour a property, this is a natural conversation to go into what we're going to go into. But if you are on Zillow and you click contact agent to go look at a property, you're being connected with an agent that you have never had any relationship with. So, or
you think it's the listing agent, and it's not.
Yeah, same thing with Redfin. If you get a Redfin tour and you've never met with that agent before, there has never been clarity with those kind of companies that provide that on-demand service as to what the relationship is between the agent and the buyer. So that's where this all falls into place.
And you'll hear us. We're not being erroneous when we change between calling someone a customer or calling them a client.
That's a good point.
If you're shopping on Zillow or Redfin and you click, hey, I want a showing, you're a customer. Until you sign a piece of paper, a buyer broker agreement, then you're a client.
That's right.
And that changes everything. That's that fiduciary thing. That's where we are your agent, you are our client, and all that. It's not... So there's that.
All right, so let's deep dive into this.
Okay, so the question he asked was what? I think he was listening to
something. He had read an article on from Kiplinger, however, and they were just talking about the Zillow touring agreement.
Yes.
and how that worked, and
Okay.
just kind of the expansion into how are we handling it here in Northern Virginia, specifically how we're handling it and so on.
Because we had, I think we had discussed about how now we can no longer show anyone a property without a buyer-broker agreement, right? Which that creates that fiduciary agent to client relationship. And then he was saying, he brought up Zillow's touring agreement where they do not have an agency relationship. So tell us what changed.
Okay, so based on the Northern Virginia Association of Realtors, these rules, after the new rule went into effect, which was on August 17th, all multiple listing service participants acting for buyers would be required to enter into a written agreement with their buyers prior to touring a home.
Okay, I have a lot to say about this.
Okay, do it.
Okay, first of all, I'm gonna pick this apart like an attorney wannabe.
Go for it.
MLS. Explain MLS first.
Okay. MLS is the multiple listing service. That is what the public knows. That's where all the properties are listed. That's where you get the information. They also set all the rules on how properties can be shown, what statuses mean. They hold a lot of cards in the real estate industry.
They do. And the point is to do our job, to be any kind of real estate agent, you have to have access to this. So all MLS participants, that's every agent. Okay, so it's not just a little group. So that's one thing. Acting for buyers must be are required to enter into written agreements. Okay, agreement. How vague is that?
It's very vague.
So what the intention was a buyer broker agreement, right? But now Zillow has the touring agreement. So it's also an agreement. So box check. Boop.
Box check. That's
great.
Right.
So tell us about that Zillow touring agreement.
So before we go into that, can you explain to them what a fiduciary responsibility is?
Yes, I can, as a matter of fact.
Go for it.
That's the one where we hit really, really hard with you guys on we are not doing anything outside of what represents you, our client's very, very best interest.
That's right.
It doesn't matter if, hey, we would love to get a higher commission and that would be a higher price. No, we're in it for you, buyer. If we're representing the seller, we're in it for you to get the higher prices and everything else. It's basically if you say, hey, the transit is top priority, we're not going to show you houses where you say life would be miserable if I have to drive over an hour, right? Even if you love this and even if it's a great deal, it's like, remember you said this, unless something changes, but everything is about you, for you. We're just overlaying our knowledge of the rules and how to make everything work for you.
Okay. And that's
Did I miss anything?
Nope, that's perfect. It's just basically your best interest becomes the most important thing once that buyer-broker relationship is established. Now we're speaking from the buyer's perspective. What most people do not know is in Virginia, any real estate agent by default represents the seller. So
without the buyer-broker
agreement. So even with this touring agreement we're going to go into, that agent still represents the seller.
Yeah.
So and that's just by default because the seller information is public, so we're only allowed to say things that are public. So just keep that in mind. That's why these agreements are so important, because if we're representing a seller, having a conversation with you, our licenses are at line. If we give you information that's not beneficial to the seller, if technically we represent the seller,
we could be sued and everything else.
Yep.
And this is, keep in mind, if you're like, my brother-in-law in Texas said, and Texas is just arbitrary. I love me some Texas. But that it's not like that. And it's like, well, maybe not in Texas, right? Remember I said the overlaying of laws from the different jurisdictions that we fall under. Okay. So
we're still in the
tell
introduction.
Me, what is Zillow's touring agreement? So that means that they don't have to get the representation, right? Like tell me what the touring agreement says.
So basically, I'm going to read word for word what it says. The purpose of this agreement is for the broker to consult with the buyer regarding specific properties and assist the buyer in locating and touring properties. These activities collectively constitute the touring services. So there's a little bit of a change in language here that we got to talk about.
Yeah.
But so basically this is, like I said, if you call Zillow or you click on show me the house and you go and you meet an agent, you have no relationship with that agent.
Oh, we have no hate this for this. Like we've
worked with Zillow quite a bit.
Before,
You may end up working or going to 4 different tours with 4 different agents, because every time you click, Zillow connects you with somebody else until they link you to an agent. So it's basically there is no fiduciary responsibility set up, but because of the NAR settlement, this document is absolutely required before any property is shown. There has to be a written agreement before any property can be shown by an agent.
Yeah. And a point to make, so I was looking at just several different states to prepare for this, and they're not all the same. Zillow's had to create different touring agreements for different states based on these overlaying of rules. So like, for example, North Carolina's, I think, was different. For Virginia, it had to specify in C, buyer and broker agree that they are not entering into an agency relationship, and the broker is acting as an independent contractor. That was a huge thing.
They're not acting, they're not a part of Zillow themselves,
Okay, so I want everybody to remember this when I start talking about INVAR, our local real estate's rules, and this being the Zillow here, local touring agreement, is not addressing something really, really important.
And so basically what this does is this allows an agent with this written agreement to be a door opener. That's all they can do. They can open the door. And we'll get into why they're so limited with that. But if you go and meet an agent and you want to look at a property, this agent can now open the door and let you go in and look at the property, but they cannot perform any kind of a fiduciary responsibility.
There are even conversations they cannot have.
So now, considering all of the overlays that we have and all the hyper local details that come into everything, where do we stand here in the Northern Virginia market since the NAR settlement?
Okay, it's a little bit wordy.
Okay.
For me, it's nothing. So
That's why you're taking this part.
You just give me a little nudge when you want me to stop. If you want to explain, just tweak something, because this is just verbatim. Okay, so if an agent belongs to programs like Zillow agents that have a touring agreement, they are allowed to use them.
Okay, this is key. Keep on listening.
Okay. It does not, however, create an agency agreement.
Agency agreement means fiduciary responsibility. Go ahead.
With that document, that touring agreement document, they can open the door and show them around. Meaning, this is the kitchen, here's the upstairs, because we can't just let you roam, right? We have to show you around. They cannot start having substantive conversations and giving agent advice without the agency disclosure and representation and presentation of the document.
Which is the buyer broker agreement, which we will go into shortly.
And just before we go too far, let's talk about what NAR,
NAR.
National Association of Realtors, let's say what they mean by substantive, right?
Yep.
Okay, so their definition, this is for agents, not like Webster's, but okay, there's a difference between a general conversation about real estate and a discussion about a specific property. If someone talks about general preferences in his or her own taste for homes, then that discussion is not about a particular property. So it's not substantive. For example, a statement like, I love or hate Tudor-style homes is about taste. Fine.
Okay. General statement.
Meanwhile, how does this Tudor home compare to the one down the street moves the conversation into a discussion about a specific property. If you were to ask anything like that, that's not like, hey, agent, is it cold in here to you? Do you feel cold? They can say, yeah or no.
Yeah.
But if you say, do you think the AC is working okay?
Can't answer without the buyer broker agreement.
Right.
Yep. And so so that's the key, is that substantive. I always thought it was substantive.
Substantive. It's kind of like me and acreage, right?
Yeah,
I like to say acreage.
Yep.
I really want to say substantive.
Yeah, there you go.
Whatever. Okay, moving on. If they plan to continue a relationship with that client, the agency relationship document should be presented and signed before the day is over.
So buyer broker agreement. Okay.
Right. If they do not plan to give advice or continue with the relationship, the touring agreement will suffice due to no substantive conversations occurring. So typically you'll go through and you'll research and find the ages of HVAC system, the age of the roof, everything, so that they can make a really informed like opinion about a property. You're not allowed. No one's allowed.
Nope, not without that BBA. I can get it, but I just can't discuss it.
Right. Some touring agreements contain disclosures. Zillow is to be used by Zillow agents and not to be used by parties that do not belong to that group.
Yep.
They should use the exclusive right to represent agreement, and noting purpose is for a specific property or is good for one day, etc. So explain what that means.
So what that means is, and this is the practice that Kelly and I have when we're meeting with a new buyer, is we will go in with a buyer broker agreement, which is the full document that creates all of the agency relationship, the fiduciary responsibility, allows us to represent, it discloses commission, it discloses all the details of a transaction.
It's everything that allows us to be amazing for you.
Yes, but we will do it if we're only looking at one property. We will do it for that one property. If we're looking at several properties for a day, we'll do it for one day. So it's not like we're getting married, but we're laying the foundation for what we can do in that given day to best serve you in that day. Then if we go back and do another day, we can either do another one-day agreement
or another one property or whatever.
And so
once you start dating us, you'll realize you want to get married.
We've been married so many times. Not really. But anyway, so that's our practice.
Yeah.
And
because it's really, really hard when you really care about people. It's so hard to be like, I can't tell you that, because you come off kind of like a not great person.
Yeah, you seem like you're just like keeping secrets.
Yeah.
And one of the things that's important here is this has always been the rule in Northern Virginia. You've always had to have a buyer broker agreement to perform.
But they didn't make you sign.
But they didn't make you sign. Yeah, so you've always had to have this, but it became practice for a lot of agents to get that buyer broker agreement signed at the time of writing offers and just carrying out, because there was also what is the term where if your actions act as if it's an implied, you would have an implied relationship. So a lot of agents depended on the implied relationship.
I guess that's gone now, right?
That's gone. Yeah. So
because we did that too. I mean, we didn't want to scare everybody off. Like
you have to sign a contract with us. Yeah.
So we're not like coming down on anybody.
Yeah. So that's the difference, is that this has always been required. They did have the implied aspect.
Yeah.
Most people depended on the implied aspect, but it is now required that there's a written agreement.
Yes. So we talked about the substantive definition. So what this boils down to in our local market is you must have, I mean, unless you're working with a Zillow agent, which we talked about that, but you must have a signed buyer broker agreement before showing buyers a property. It is Virginia law, and the brokerage agreement contains important disclosures for the buyer and protections for the brokerage and the buyer. Okay. Yep. So it is the law. You do have to have it. Go see a property with a Zillow agent. You will have to sign a touring agreement at least.
But you can't ask questions.
You can't ask. If you do, and if they tell you, don't tell anybody.
And if you do, and before they tell you, they say, I really need you to sign this other document, they're not just trying to rope you in. It is the rule. Now, here's the thing about the buyer broker agreement. Number one, it can be set for specific time, like we said, a day, a week, or whatever. Number two, it can be set for specific properties. But even if it's set for 6 months, there are, depending on how the terms are set up with your agent, all you have to do to terminate the agreement is written notice. Now, they may have a termination fee or something like that, but you can get out of these. So you're not locking yourself in. It's not something to be scared of, that you're committing your life to this agent at that point.
I would say that if people are too afraid of these buyer broker agreements, like what if there are agents that do try to get more out of them than they really should,
Yeah.
And they become scared, I have a feeling there are going to be a lot more touring agreements. But then once those agents are used like a sour, sad rag on a dirty diner table, they're going to start charging for showings. They're going to have like, you know what, I'm not doing this, I'm going to charge.
That's already happening.
Is it?
Yeah, in fact, the people that sued NAR, the main guy in the lawsuit started a real estate company, and he charges $50 per tour.
Is that true?
That is absolutely true.
See, because nobody likes being used.
Yeah, so he started this company because he said buyers just want to do this. So So if you come across an agent that's charging you $50 to go do a tour, I don't know why you would pay $50 to do a tour when it's just a tour house, but people apparently are doing it.
Because if that's the only way they're getting money, because they can't.
Yeah, sour rags.
Because nobody likes being used.
That's right. All right, guys. So I think we covered that pretty in depth. So in summary,
I think we did a really good job.
Yeah, I think so. High five. Yeah. All right. I'm not even going to summarize because I think I'm just going to be redundant.
I like it.
I think that's what a summary is, right?
Yeah.
Okay. So in summary,
use us.
We're
going to ask you to sign an agreement.
Yes.
We'll date. You'll fall in love. We'll get married. We'll find you the great house. You'll be really happy.
That's it. Well said. All right. Let's. If you have any questions, please let us know. If you'd like us to deep dive and explain anything further, or actually go through the buyer broker agreement with you in detail, we'd be happy to do that.
We've done that on one before. We could always. Maybe you should just link it so that they don't have to.
That was the old agreement, though.
We get to do that again.
We're gonna do another one.
I'm so excited.
Future video. All right, guys. Have a great week, and let us know if you need anything.
Bye.
All right, here we are for this week's.
This is the market snapshot.
Yes, you got it.
All right.
What's happened? I actually had to think too.
Okay, good.
So what's happened in the last 7 days in the Northern Virginia real estate market in under 5 minutes? Okay, Kelly, are you ready for this?
I'm ready to talk about that wiggly orange line there representing the buyer activity. That's how many properties have gone under contract in Northern Virginia in the last 7 days. The squiggly blue line underneath that is the listing seller activity. So that's how many new homes have become live, active on the market. Yep. Not coming soon, right?
Nope, not coming soon.
Just active.
Yep. Okay.
In the last 7 days in Northern Virginia.
That's right. And why do we do this? Because if you are looking at sold data, it is quite often anywhere from 45 to 60 days old. And if you're trying to use old news, and if you're trying to use that data to make decisions in today's market, you are using old news.
Old news.
To make those
this
decisions.
Is not like that we don't have any other material. It's like you need this.
Yeah, you have to have this. So this is the lead measures. These are, like she said, people that went under contract, new properties on the market. What's the ratio? How do you respond in the market?
And what does it all mean?
What does it all mean?
What does it even mean?
It means that.
Why do I care?
It means that this is how we strategize. Anyway, let's dive into it, and then we'll talk about the meaning.
Ooh, as buyer or seller.
Yes. Okay, so buyer activity, as you can see in the last 7 days, did increase. It has had a trend over the last 4 to 5 weeks of going up. Buyer activity is going up, which is your demand. Mm-hmm. Inventory or seller activity has been decreasing during the same period of time. So we are having more demand, less inventory. Less inventory, fewer inventory.
Oh, you were right. I didn't know inventory was coming up.
That's
you smarty
right.
pants. You got one over on me now.
So we're having less inventory with more demand. So less supply, more demand equals.
That's so hot.
If you come over here.
I love good grammar.
If you come over here into the buyers versus sellers market, what color is that? Blue?
It's light blue, and I wish that you were different.
You can change it. All right, where'd they go? Our blue line is a neutral market. Anything above that blue line is a seller's market. Anything below is a buyer's market, seller's market meaning that demand is higher than supply, which means that the sellers have the upper hand. Mm-hmm. And you can see that we are slowly increasing that seller's market. Last year at this time, we were at about the same level with the seller's market, and we're sitting here again.
And isn't it going to go like even more than last year because it'll be after elections and everybody's going to be making all their moves?
Yeah,
and everything?
So in most of the years following elections, and I don't have the exact numbers, I know that at 7 of the 8 last elections, the property values have shot up. The only year it didn't was in 2008. That was the real estate crisis. Yeah. But for as well as market activity typically goes up after an election. So we expect after November happens that and the uncertainty is gone, whichever side wins, it never follows parties, that the market will start to grow again. So it's.
And I was surprised to hear that. Mm-hmm. I thought it was like not party specific, but if the party didn't change, I thought, okay, it's not going to be that big a deal.
Yeah, because everybody's not moving in and out.
Yeah, that's kind of what I thought. So that kind of went against what I was.
Yep. That's why we use numbers versus feelings. Statistics. Statistics.
I can't even say it.
So basically now this is a seller's market, the feel out there, it's kind of strange. It's
It
like
feels like there's no real estate market out there right now.
it really does. So you'll have you'll have some properties that are coming on and they're getting 6-7 offers and they're going under contract sometimes before the weekend even ends. And you have other properties that you expect that to happen with that are still sitting on the market after 21 days. So
yeah, it's weird.
it's
right
a
now.
weird market, which means that it's a great opportunity for buyers because there are properties that are quality properties that are still on the market. They're not going to come down in price.
Well, this is what I'm saying. It's down in price right now compared to what it's going to be after the elections because the prices are going to go up.
Yes.
So if you want a discount, then buy now because it's discounted based on what it's going to be
That's
in
true.
30 days.
They say when you're investing, you make money when you buy. Now's the time.
That doesn't mean that you buy like right now and you'll automatically make money. I mean, for this it does, but like generally speaking, otherwise I got some shopping to do.
So
Please,
you have to.
I'm out.
So you have to be strategic about
Sean, I
when
gotta
you
go buy
buy.
now.
Well,
You said.
okay, we're gonna have a whole conversation about what that saying means. It does not mean go shopping. All right. Anyway, if you have any questions, it looks like we're over our 5 minutes. If you have any questions, let us know. And if you're considering buying, now's a great time. Selling, it's still a good time, but you really have to be strategic with the property, and you can still get that top market value.
Yeah.
Yep. Okay.
Yeah.
All right. We'll see you guys next week.
Hey everybody, it's time for this week's Mortgage Minute with Tatiana. Hello.
Hello, Tatiana.
Hi guys, how are you?
Good.
Good. How are you? And are you naughty or nice?
Yeah, I'm naughty, of course.
Of
course.
Of course.
But the Fed set the rates. It should still be dropping.
It's like go back to last week's video.
That's right.
They should, but they don't. What do you see? Do you see this?
Yep.
Yes.
You got it.
Yeah, all right. So, yeah, for the last week, from 11th to 17th of October, the rates increased slightly. In general, higher rates reflect the strength of the economy that is supportive of the housing market. But so if it makes everyone feels better, as compared to a year ago, the rates are more than 1% lower, 1%, a percentage point lower.
Yeah.
So, and potential home buyers can stand the benefit. So it's right now the 30-year fixed at 6.52. The jumbo is actually a little lower as it used to be before. So it's 6.36.
Okay.
And jumbo in our area, actually, we just got increase. So the jumbo could be considered either starting at 802,650 or at 1.149825.
Okay.
So,
and that's fantastic because you're helping us with some clients and they were kind of like, we don't want to get a jumbo loan. We've heard they're bad, but I thought when I saw these rates, I'm thinking, whoa, there's no reason not to, right?
Yeah.
Well, so in jumbo, so interest rates wise, yes. However, it all depends on, actually if buyers qualify for jumbo or not, because jumbo would require higher down payment, and they're in general they're more restrictive on other things such as how much money they need to have in reserves besides the down payment and closing cost, or they could have their little restrictions on what the credit should look like, maybe not just the credit score wise, but they might require for clients to have at least three trade lines open and active for 24 months, for example, and not everybody has that. So it could be more restrictive or more involved, in general. I was just working with one client who did get a jumbo, and there was just more documentations were required, like 3 years of tax returns and this and that. So they don't like that streamlined process of when we verify assets or pay stubs electronically. They like to see actual bank statements and pay stubs. So the clients will have to provide more documentations because of that. But in general, if all stars aligns and everything is, they qualify, the rate is better.
Yeah, right.
Gotcha.
Right. Okay. Just a lot more legwork.
Exactly.
So are we expecting the rates in general to just kind of stay in this? Because I know it's up, but it's up 0.02%. Are we expecting it to be kind of flat for the next foreseeable future, or are they anticipating another rate cut, or?
They're slightly going up, so you can see that they're increasing a little bit. So in a way, it's flat because we're not expecting them to skyrocket or drop. But as of right this moment, the tendency for them to go up. So if somebody is purchasing right now and they're thinking to lock or not, I recommend locking. I have 2 clients currently not locked because they just want to see what's going to happen with the feds and election. But I don't advise doing that.
Yeah.
Actually.
Okay. You know what? I do think we should add that tidbit to all of our mortgage minutes with you, is just to kind of get your feedback on how are you feeling, would you lock or not lock?
Yeah.
And obviously
lock or not. And maybe we could do like a graphic.
Yeah. I do think we need to ask that every time. Like, is this, waiting or like floating or locking?
Yeah, it's a good idea.
Yeah.
Okay. All right, I have a question for you. Sometimes I'll have buyers that are working with other lenders, and I will recommend that they talk to you and go through the process and get pre-approved just to see what the rates are, see, just because we know you're going to get us to a closing table. At what point in the process, I know that there's not really a set point of when a buyer is locked to their lender, but at what point in the process are they pretty much locked and committed to their lender? In other words, can they come and have you do these things for them, but still have a little bit of flexibility? How does that work?
Yeah, so, there's really no agreement, right? The lock-in, there is a lock-in agreement when they lock the rate, but it doesn't lock them into working with us. However, the time-wise, if they're gonna start shopping and shop until the last moment, they need to think of, is this lender going to be able to settle them on time? And also when the contract is presented, there is the lender's letter in there. So, and that's more question to you, I guess, right? As a realtors, when something like this happens, when they go with different lender, what are the requirements for the contract, how soon they have to identify the lender, and then they have to notify the seller, and seller might or might not agree for them to switch to another lender, especially if they're so far into the transaction. And things like, if let's say they were working with me and I did the appraisal, I did everything, and a week before settlement they decide to go with another lender, we have to, it is a process of moving the appraisal to another lender. If that other lender allows something like that, not every lender would allow that. Are they going to be able to meet all those deadlines? And we all, as lenders, we also are bounded by regulations on how soon or how late we have to disclose documentations before they can go to settlement. So all that needs to be considered. And even though there's really no obligations to go with this particular lender, there's no like a buyer's broker agreement kind of thing. But those things need to be taken in consideration when they're switching lenders.
I agree. So from our perspective, number one, I think that you guys should have representation at least once the loan disclosure goes out, and they're under contract, loan disclosure is out. There should be something, because when you're representing our buyers, a lot of times, because you and Prosperity, you guys can move so quickly that a lot of times it's that gets our contract accepted, and also the fact that it's you and how communicative you are that gets that contract accepted. And I know when we're representing sellers, if we're convincing our seller, yes, take this one because we know Tatiana, we know we're going to get to settlement, and then they want to switch. It's like, this was a huge thing, you know. Sometimes the lender can be a huge, huge win for the contract.
But
go ahead.
Also, the question is, why do they want to switch?
Right.
So that's an important question. So let's say the lender dropped the ball. I'm not talking about me. They go.
The reason they came to you.
Yeah.
Right. That's the situation when they come to me. So the question is, why do you want to switch? Is it because you cannot stand the lender, they're making your life miserable, or it's because you found someone who is promising you better interest rate?
Yeah.
Right.
So in most cases that's the case, right? Then when they live in me, they find maybe rates drop, and when we lock the rate, you protect the rate basically from any fluctuations up or down, right?
Mm-hmm.
So when you start 3 weeks later, you start shopping for the rate, you of course comparing apples and oranges, but just give the lender a chance to, if not match, but get closer to this new rate quote, right? So and again, the rate is protected from going up or going down. There might be some way to lower the current rate within that lock. Doesn't happen all the time, but just give the lender a chance to match it, and just think of how much work was input into this, and it's not only one person that was working. It's a processing, underwriting, if it's late in the game, the even closing department, the management, there's so many people involved, and getting the credit report costs money, the pulling data information on your income and assets, making it all streamlined and automated for you, so you don't have to provide it. That actually on the back end costs a lot of money for the lender. So I'm not saying that just because of that stay with them, but just take it in consideration, and just give them a chance to match or get somewhat close to other.
And on that topic, so I am a shopper. Like, I love nice things, but I like getting a deal, right? Like, I get so excited when I get a deal on something amazing. And it's not that, say I go out and I find this lamp, right? And it's, man, I found it for $250 and I'm going to buy it because I don't want to lose it. But then I go out and I will keep shopping, even though I have the lamp. I was willing to pay $250 for it. I have it. I'm still going to keep my eye out and shop for that same lamp cheaper because of that need to have a deal, right? So there are a lot of people out there like that. And to your point, let's say that they're however long into the process, they're under contract, you've locked the rate, I'm using you as the lender, and they find someone else who says, oh, we can get you a better rate. Well, that's great. We've talked about this, how they can say that all day long, and it's not until they get the actual loan disclosure, right? And that's what they then have to take to you to compare apples to apples, so that you can show, okay, they're charging you discount points. Is it really a lower rate, So I might find the same lamp for $225, and I'm like, woo, I'm going to return this one and go get it. But I found it on Facebook Marketplace. It's used, and I have to drive 2.5 hours out to get it. Then I'm kind of like, okay, it doesn't work out, So there is that point to be made.
Yeah.
Or you buy that lamp, you return the first one, and then when you turn the new one on, it's not working.
Exactly. That's right. That's right.
I've done that.
Yeah. Well, and the reason I asked the question was because we'll have people that they, let's say we're getting close to putting an offer in, we're pre-contract, and I'll say, hey, just talk to Tatiana just to see. And they'll say, well, are we committed to her if she gives us a pre-approval? Are we committed to her if she gets us a POFA? Are we committed to this? And I explained to them that really your commitment, in my opinion, is dependent on exactly what you said, the time frame. If you're offering a 14-day close and they find another lender with a better rate, but it's going to take them 35 days to close, they can't do any switching because they're
Then
stuck.
you're committed based on the choices.
You're
they've
based
made.
on the choices, based on the contract, and realistically, even if those things are all equal, once that appraisal's ordered, that's pretty much when you're committed. What I'll tell buyers, which is usually day 1 or 2 after you get out of the contract.
Yeah.
So the whole thing about going all the way down and being 3 weeks into the settlement, if you have a buyer that does that, that's never a good situation. So I don't want anybody watching this to think that you can be 3 weeks into a conversation and just because you can do it, that it's a smart
It doesn't
thing to do.
logistically work out
It
for
does
your
not
contract.
work out. Yeah, absolutely.
Yeah.
So I wanted to make that clear.
Yeah.
Yeah. And
Well,
you're not
thank you so much for asking these questions. It's great.
Yeah. All right. Okay. Do you guys have anything else?
Do you have anything?
That's it. Nothing else.
Okay.
Enjoy. Nice weekend. The weather is
Yeah.
gonna be beautiful.
I know. I'm excited about that.
Yeah. The open houses all weekend. All right. We'll see you next week.
Okay.
Bye.
Bye.